Hey guys, thanks for checking out this week's FinPrep Trading and Investment video newsletter. So I'm going to take you through 4 charts quickly here this week, and then just 3 notes on the SPY chart, which seem to argue for bearishness in the short term. So the first is basically, as you could tell, price is being capped by this sort of blue line, which is your 50-day moving average. So obviously, an inability to get above that. Clearly is somewhat of a cause for concern. The second, which was mentioned in a prior week, is the bearish crossover of the 20-day moving average with the 50-day moving average. So basically just indicating that short-term price momentum is declining, particularly with regard to the medium term. The third factor is on a weekly basis, you could basically see this down day on the 9th here. We convert the daily chart to a weekly chart. You could kind of argue that this is a bear flag, so basically off a down move, you would get a diagonal, slightly upwards drift, kind of retracing some of the move, which would then be followed, classically anyhow, or according to textbooks, shall I say, with a further downside move. So depending on where you want to say the breakdown kind of occurred from, say, 218 down to about 213 and a half, so 5 points. So if we have a breakdown off 214, according to the formula math, is essentially stating a price target of approximately 209, so just another 5 points, essentially assuming symmetry from the point at which price drops, drifts, and then drops again. If that's the case, given the bearish crossover, given the inability currently to get above the 50-day moving average, that 210 trend line we've discussed in prior videos makes sense as a possible target. And again, depending on how you run the maths and so forth, even one could argue for a decline down into the 205 area, which coincides with the rising 50-week moving average, as well as this trend line drawn off a few highs that we experienced here over the past course of the year. So not positioned currently for bearishness within the SPY, and currently, at least for our personal purposes, view it as an opportunity to add to longs rather than seeking to establish an entire market turn, but of course anything can happen. So whereas we spent the past 8 weeks kind of drifting in this tight trading range above prior all-time highs, now we're basically on the underside of it within a bit of a lower price environment, but still at elevated levels, just clearly drifting sideways for about the past 3 months. So a little bit more interesting chart then would be gold. So gold, we pointed out this trend line we drew off the declining tops, so kind of going sideways in summer given the sluggish seasonality reviewed in prior videos, and this has played out beautifully as far as price coming into that trend line and fading nicely, and then even last week coming into that trend line fading nicely. So question here for the week ahead is, does the 125 hold this time? It currently has as of Friday, a bit of a bounce off of it, and then really to see does it hold, particularly given that we do have the declining tops across this price pattern, within an overall context of bullish price pattern for gold. So can't rule out direction in either case, and will remain interested into seeing what happens with gold. The XLF chart that we discussed last week kind of did play out as anticipated in terms of taking a nice bounce off that 19 price level. Again, just with this sideways choppy market, though, only 1 day of follow through and then quickly revisiting again, finding a bit more footing, but still not terribly encouraging. Just for looking for the trending markets, as we may have been spoiled and accustomed to in the past. So another component here is similar to our SPY chart, is an impending bearish crossover of your 20 DMA with your 50 DMA. So something to be aware of there. Another somewhat analogous chart then finally is the IBB, so a biotech index ETF. And really basically the piece I wanted to call attention to here was, you had your your all-time kind of high on this chart then was in July of 2015. You had a subsequent peak in fall or September of 2015. And as you can see with the trend line, price came in and kind of corrected a bit of that down move in through December prior to resuming its sell-off along with the rest of the market. Kind of going into 2016. So price having moved sideways, consolidated, gained a bit of a base, broke out, kind of faked out, and then a proper breakout of that downtrend off those two kind of secondary peaks off the all-time peak. And here it is, a nice bounce, pretty good solid bounce, decent visible volume on Friday, capped below the rising 50 and 20 DMA. So Interesting, somewhat analogous chart on IBB. We'll keep an eye on it. But yeah, anything obviously is possible. Not necessarily calling for downside in SPY, but happy at least to consider adding to longs at the 210 or perhaps 205 area on SPY. All right, so speak to you next week. All right, take care.